Airbnb stock has taken quite a lump in the last few days. This is because guidance has somewhat softened on the online booking platform. However, when there's blood in the water, sometimes, just sometimes, it gets my lobes a tingling and I smell opportunity. Now, they've dropped a little over 10%. Okay. Does this, however, put them in the range where maybe I'm tempted to get a little taste? We'll take a look at the financials and see if Airbnb is perhaps worth some consideration at this level. So on their revenue, you definitely see that there is some seasonality to their business model, given that some quarters tend to be higher intra-year than others. It makes sense. There are, of course, sort of slow and peak travel seasons that happen throughout the year in different places. But overall, the trend compared to comparable prior year quarter tends to be upward in terms of this revenue. Now, it's not necessarily as fast as it once was, and that deceleration coupled with perhaps the more conservative guidance is spooking people out of the stock right now. However, if this is still a good business and that's an overreaction, that could be an opportunity to get a good business for a solid price. So this is a capital light business, right? It's got an over 80% gross margin, meaning of the top line, 80 cents out of every dollar before their overhead, before their like SG&A and such, is profit, right? It's pre-tax profit. That's really great. So one of the things I've been looking at in my portfolio is how much of what I have is capital light versus capital heavy. And it does seem like I have a lot of businesses that are capital heavy. I mean, and those businesses tend to get punished a lot during any kind of short-term issues. Now, this is a capital light business, so short-term issues will still punish them for sure, but I think the risks as perceived by the market and the actual risks even tend to be a little bit lower in a lot of cases. So I absolutely love the amount of free cash flow that this business has. And it doesn't surprise me that they would have a lot of free cash flow considering how good their margins are. But their net income tends to be lower due to a pretty good amount of stock-based compensation. I think it was 385 million worth on the most recent quarter compared to the 1 billion in free cash flow. So if they're buying back an equivalent or greater number of shares, that cash is effectively being eaten up. So that's just something to keep in mind. But they do have, I think, a pretty solid foundation here to build upon. That substantial free cash flow lets them build up this big old fat reserve. They've got nearly $9 billion in the bank net. This is net of their long-term debt. So they could pay off their long-term debt and still have $9 billion in the bank. That is an excellent position to be in, and something you tend not to see in very capital-heavy businesses. And it really de-risks the investment in a lot of cases unless the multiple is crazy, right? So again, I'm leaning towards this being just a really major positive for Airbnb. Now, Delution used to be pretty serious a few years ago, but it does seem like they've kind of flattened that out, and it seems like they probably buy back around the number of shares, if not maybe a little bit more than what they issue in stock-based comp. So that more or less kind of evens out, though I would like to see stock-based comp maybe get kind of toned down a little bit if there's a way that they can kind of get that to a more reasonable level. Obviously, I don't want them to lose any great talent that helps them keep their competitive advantages, but I do think that I would like to see the cash flow that they have and any buybacks they do be actually accretive to shareholders and not just offsetting stock-based compensation. So looking over the valuation, and again, this is just a testament to how capital light they are. The price to free cash flow and price to operating cash flow are almost identical. That's amazing. Now, the price to earnings is showing at a 15.5, and I believe that that's because I think there was like one random quarter that had like a really high net income, but I don't believe that would be the typical in the long term, again, due to the stock-based compensation coming off of net income. But still, I don't think that this is a ridiculous valuation if you believe that there's a good amount of growth coming in the next few years. They really just need a couple of strong spurts of growth in order for the stock to very much be worth it at this price in all likelihood. Now, yes, for now, maybe we're anticipating a weaker consumer. Bookings might not be as strong as we would hope, but overall, is Airbnb still projected globally to grow over the next few years or not? That's the question. Analysts are giving it a hold rating. We have a high of 195 with an average of 133 with a low of 90. And that's not like, I mean, it's a pretty widespread, the low being less than half of the high, but none of them seem like impossible from today's price, depending on how the next few quarters go and how guidance is. If the stuff with the weak consumer starts to alleviate, if depending on how bad or if at all there is technically a recession and all of that. So it could happen. I'm not going to say impossible, but I do think 195, if we're going to have a quarter or two that's kind of bleh, I think that's a little bit frothy, to be honest. And maybe these guys haven't adjusted since the most recent earnings, so maybe this will show different in a few weeks. But at the moment, yeah, I would say 195 is probably a bit But, I mean, I definitely think that the share price is already kind of being punished. Could it go lower? Well, if things are even worse than the kind of soft guidance they gave, yeah, I could see it going down another 10, 15%. That's not necessarily unheard of. But the question is, do we think it would stay there? Is the drawdown in share price an opportunity, or is it just a proper correction on something that was maybe a little stretched to begin with? So Airbnb, with a pretty straightforward DCF to justify the mid 110s, 114, 115, we'll assume they get the EPS projection target for 2025, which analysts have at 526, or at least they did, according to the data feed. Get credit for that tangible book value because that's just a ton of cash for the most part. And then assuming 11.5% growth on their bottom line. Now, you could play with the number of years, you can play with the growth rates, but I think over at least the next 2 or 3, they're anticipating growth that's higher than this in the bottom line. I saw numbers from different sources in the order of 14, 15%. So could they achieve an average of 11.5 over a slightly longer stretch? I think that they could. I don't think that's impossible. And in fact, they could have a couple slam dunk years and it could be really, really juicy, to be honest with you. This is certainly not a bad business, and I don't think that the valuation is super stretched, and I'm starting to think that it's worth consideration. Morningstar rates them as a narrow moat, and that's partly due to the network effect, the virtuous circle that they have from, hey, they are the number one place that short-term rental owners use to list their vacancies, and that brought the travel enthusiasts, and then the presence of all the travel enthusiasts brought even more short-term rental owners. So you can see how that would sort of build upon itself, so to speak. And I keep hearing and from people who are in this stock that are bullish on it long term that there is still a lot of untapped potential, especially internationally, a lot of markets where there's still maybe underserved. My counter on that has always been, it seems like there are a lot of buildings and neighborhoods and stuff that are oversaturated, where they're even trying, where like homeowners associations and things of that, like cities with their ordinances and stuff, are actually trying to restrict to an extent how many properties can be Airbnb properties. So I can kind of see it from both sides on that perspective, but this is definitely a capital light business. They've got competitive advantages. They've got the brand and the name recognition and everything, and they've got a great balance sheet, and their multiple isn't like ridiculously demanding. So there are a lot of positives that I think make it worth at least a little bit of consideration around these prices. If you made it to the end, I encourage you to comment below if you own any Airbnb, or at what price you would be interested, or what price you think I should consider it. Make sure also you join the Discord, link in the description. Like for the algorithm, subscribe to the channel for all of my videos, because I need to get to 3,000 subscribers in record time. This is a necessity. Also, I'm trying to get my first 500 Twitter or X followers at Mr. Macho Mog on their link in the description. I don't stick strictly to investing posts on there, but I try to be entertaining at least, and I do talk a lot about investing on there still. Also, if you care to support the channel directly, you can become a channel member. I always appreciate that. When my channel members make suggestions, I try to at some point get a video out on the stocks that they're asking about. And as always, everybody, take it easy and have a wonderful day.